Hey guys, welcome back to my channel. I updated my disclaimer, so please go ahead and pause to read the full disclaimer here, and then I will continue on with the rest of the video. So over the weekend, there were a couple of interesting things that happened. I had a talk with a good friend of mine who's in the finance space, really smart guy, works for a successful group, and he personally had the opinion, not saying it's investment advice or anything like that, that AI crypto stuff is junk, and he thinks that's rallying only because of inflation. So what inflation does is makes everything more expensive, including stocks. So assets will go up in price, and we saw that during COVID where stocks started going crazy up. That was because lots of people started getting money from the government in the form of checks, and there were also a massive number of US dollars being printed by the Fed Reserve. I won't get into the details of that right now, but basically, inflation causes stock prices to go up sometimes, and that might be what we are seeing on the stock markets right now. So, what happened today exactly? Well, there was something called the CPI, which ended up tracking today. Now, the CPI is the consumer price index for the US market. And so, what this tracks is basically the costs for a lot of things that people buy. If you wanted more details about that, what exactly is the CPI? I'm sure Investopedia has a really great article about this. So the consumer price index, it's going to be about, 80,000 price quotes collected every single month. Retail stores, service establishments, rental units, doctor offices, all these different places that we get this information from. And what we do with that is we try to see what inflation looks like from this. So if we look at what the actual core CPI was, it came out this morning at 5:30. We see that the actual was 0.2%, whereas the forecasted was 0.3%. So in this case, it's red because actual greater than forecast is good for currency, and then 0.2% lower is actually bad for currency. That doesn't mean that it's bad for consumers. So the consumer prices only increased moderately for consumers, and that's a good thing. Don't get confused by the colors here. It's good that there's a little bit of inflation, but not too much, because what they're basically trying to do is bring inflation down. And right now, we just want to make sure that we're still growing, but the inflation is going up by less and less. So it's kind of like a balloon. A balloon might start expanding really rapidly, and if the balloon expands slowly, it's still expanding, but it expands slowly. So you can start to be more careful about when you're close to a popping point. And what you can do is slowly deflate rather than have a big, violent pop. Now, with all that being said, the Fed is going to try to cut interest rates probably. So if we look at some places like one of my favorites is Polymarket. Polymarket gives bets on stuff that a lot of people are betting on. And one of them is the economy, or one area. So when we see the interest rates, that's for the EU. Specifically, we want to look at interest rates for Fed rate cut in 2025. Most people think that this is going to happen right now, and how much it happens, that is pretty interesting. So the Fed, in other words, the Federal Banking Reserve, they're probably going to look at a 25 basis point decrease. So that's a 0.25% decrease in interest rates. That's probably going to be good for the economy, going to help people get a little bit better loans, because the Fed basically controls interest rates that set a standard. If the Fed standard for interest rates is really low, lots of people want to borrow money because you don't have to pay back as much. If the Fed interest rates are really high, people are scared of borrowing money, and people are scared of loaning money because that money is people are mostly just scared of borrowing money, and people can make a lot of money by loaning because they have a lot of interest rates that they can charge that might be competitive. I don't know. But what I do know for a fact is lower interest rates are generally good for the economy. And what we want is for this CPI to go down. Now, generally, prices are pretty sticky. Food and energy prices tend not to go down. But if they're going up at a slower and slower rate, that's still good for the Fed. So anyway, that's CPI. What else happened today? There's NVIDIA and AMD. So basically, these guys had to pay 15% of anything they sell to China over to the US government. So the US government is basically putting a 15% sales tax on any AI chips that are being sold to China. And what we really care about here is how that affects these stocks. I personally believe that that's bullish because NVIDIA and AMD will probably increase the cost of those particular chips. So they will be passing on the costs to the Chinese consumers, is my guess. But then China said to its companies not to buy. China says don't buy NVIDIA, AMD chips. If you'll see, China is telling companies to avoid these chips. And I think this is more of a political thing happening right now between the US and China. We'll see whether or not that holds. I personally don't believe that people will stop buying NVIDIA or AMD chips because these are the most cutting edge semiconductor chips right now. And anybody who wants to do things in AI space, again, AI is very hot right now. So I think those folks are still going to want to pay that premium and get the best in class chips. Now, speaking of chips, there's also something that happened with Intel. So the Intel CEO got called out a couple days ago and basically said, oh, this Intel CEO guy should resign. But now there's been a flip-flop, and Trump basically had a meeting with the guy and then says, oh, this guy is so great. What a lot of investors are starting to realize about this particular presidency is there seems to be a lot of showmanship. So a lot of folks are starting to interpret the way that the president negotiates all of these different kinds of deals with businesses as simply part of the way business has to be dealt in this environment. If we look at, for example, Apple's Tim Cook with Trump, Apple gave Trump some sort of glass sculpture with 24 karat gold. And it sounds a little bit reminiscent of those ancient times when you have some merchant visit some great king, bringing great lavishing gifts of gold. But this is the reality of today. And whether or not you agree with these practices, this is the situation that's required for some of these organizations to operate. So that talks about mostly the stuff that happened in the semiconductor space. What we want to go and talk about next is what did I do and what are we going to do next? I bet on NVIDIA because I said that, you know what, I think that the markets are going to agree with me that there's an overreaction to this idea of a tax on these AI chips. I think it's just punishing China. It won't really punish NVIDIA or AMD that much because I think people will still want those chips. So I bet on NVIDIA, which was good, and I got a 3x return on my money for that with a leveraged ETF. So again, the leveraged ETFs, if you watch my previous videos, they basically are a bet on the market that will increase proportionally to however much the original stock increases. So if the original stock increases 2%, then a 2x leveraged ETF will increase by 4%. In this particular case, I think I got about 3 or 4% increase, which was pretty good on the 3K bet. But what ended up happening was I got greedy. I didn't want to just pull my money out, and instead I tried to bet against the money on the market because I thought there would be a reversal. If you look at what the S&P 500 did today, there was no reversal. I thought it was going to do a line up, line down, or some sort of curve up, curve down. Nope. Just a line up. Looks like some sort of a logarithmic curve, if you know what that is. This is a good indication that the markets are generally happy with CPI. They think that AI is continuing to be bullish, and they think that generally the economy is still relatively resilient, even though there are these tariffs in place. So I'm personally short-term bullish. I think that's going to be what I do tomorrow. This is not investment advice. It's just me thinking. And I'm going to look at the markets, see what the signals are early on, and try to see if I can play something with semiconductors. If it seems like stuff is going down that I think is bullish, like Meta, Palantir, or some other things that US politicians have been investing in, here we can see there have been a couple of published trades on August 7th. This was, about almost a week ago now, but I think that these are still pretty interesting to look at. This Cleo Fields, a Democrat from the House of Representatives, has been trading a lot of this. You can see they've traded at least 50K each time, and these are all purchases of NVIDIA. So clearly, this particular politician is extremely bullish on NVIDIA, and I think I will be too. Now, there's another two, which was Meta, Palantir. I also wanted to add AVGO, which is Broadcom. So Broadcom is another semiconductor-related company, and they basically do design, develop, and manufacture. Now, I've seen a lot of politicians trading AVGO. I think Pelosi as well. So let's go ahead and pull that up really quickly. Yeah, so if you want to take my word for it, I do believe that Pelosi, you can just take my word for it, and even if I'm wrong, it doesn't matter. It's just my own personal thoughts. I don't expect you to do anything with this information other than just kind of learn from my mindset here. So Meta, Palantir, AVGO, these are all AI related stuff. I don't personally touch crypto because I think that crypto has more scammers and more crap there. I do agree that generally there's a lot of crap going on with AI, crypto, lots of people hyping this stuff up. But as a software engineer, as a machine learning engineer, as a data scientist, I see genuine value with semiconductors, with AI, and the value delivered to customers. I don't think that AI in the long run is going to be that much value add for companies, but I think it'll be a huge value add for customers to such a big extent that it's just going to have to be another operating cost that a lot of companies eat. It's kind of like front-end design. So front-end design is, let me see if I can use Instacart as an example. So front-end design is really all about how do the buttons, how does the website look? How does it feel? Does it do cool stuff? Like does text flow? If you just saw those little carrots there on the loading screen, that's all front-end design, and it doesn't necessarily add value to the company itself, but it increases the experience for customers, which is really important for getting more customers engaged and getting more people interested. So I think AI could potentially be a huge thing in this area too, where people are just going to have to do it because customers will only want AI solutions that are helpful in certain aspects. I'm not saying AI for everything. Like, I don't think everyone's going to want to talk to AI customer service chatbots. But I think that stuff that's powered by AI on the back end might be faster, might be a little bit more friendly, might be more conversational than the way things are right now. Like, let's say I want to go check my credit report, I want to understand it. If I want to Google all of that, okay, fine, but it would be nice if I could have a question and answer session with an AI. So there are plenty of reasons, I think, to be bullish on AI, and that's the reason why I'm going to be looking out for these. Now, there's another one here. This one is more controversial. So ZIM, this one is one that I think was a meme stock for a while. Now, they do have pretty good dividend. If you look at their, let's see, ZIM dividend, I think their annual dividend yield is about 44%. Now, if you're a US citizen and you are trying to capitalize on your taxes, you have to remember that in the short term, you're going to be taxed this dividend yield as income. So remember that. Whereas if you hold the stock for more than a year, then you're taxed at a long-term investment rate when you sell and make a profit at only 15% of the gains. So if you make $100, then you get to pay $15 in tax if you hold something for the long term, and then you have to pay at your income level because it counts as income if it's shorter than that. So why ZIM? Well, ZIM is good for long-term dividend investment. I think this is, again, my own personal opinion. I'm an idiot. I don't know why you're watching this video. But the PE ratio is less than 1. So PE ratio is basically your price to earnings ratio. That means how expensive each share is relative to the total earnings at the company. And you can go on Investopedia and look more into this. Generally, you want to look for low PE ratio companies because those are companies that are generating a lot of income, but which don't have a high price on their stock. So good dividend, pretty low PE ratio seems like a good investment, but the problem is that this is extremely controversial because this is an Israeli company, and these kinds of Israeli companies may have deep involvement with the government. I don't know the details specifically of this particular company. They could be completely separate from the government. Maybe they hold different political positions from the government. But I do not know that the Norwegian fund is pulling away from Israel investments as of this past week. So Norway has this thing called the Sovereign Wealth Fund. I think that originally started from oil. Sovereign Wealth Fund from oil, Norway. So it's just generally, yeah, I think. In any case, there's this big sovereign wealth fund that is controlled by the government of Norway, I think, and they decided that for political reasons they wanted to pull away from Israel investments because they felt like it was indirectly contributing to certain actions that Israel is conducting right now. So if you don't mind the controversy, if you believe just objectively that you want good stocks, then it might be a consideration for these that are low price but high earnings. Ultimately, I'm not going to tell you what to do. I'm just offering you some information here. I don't necessarily support or defend anything that's happening right now in that area, but I just do want to make note of this because I have invested in ZIM in the past and I've had good dividend returns from them, so that's just food for thought there. Okay, well, I don't want to make this video too long. I'm sorry that I'm in a bit of whisper today. Tonight I'm making the video pretty late, but I wanted to get this in before tomorrow so that people kind of have an idea of how I think